good afternoon, depending on where you are in the world. Welcome to this webinar and live demo of Innovate Tax's inFlyte solution. That's our native Oracle solution for calculating indirect taxes around the world. I'm going to wait a couple of minutes just to let people join, and then we'll get into the session. But this is the first time we've ever done a live demo slash webinar, so fingers crossed all the technology involved works for us. Normally during these things there's always some kind of hitch, but fingers crossed. I'm just going to wait till just two minutes past the hour. I can see some people still joining. Okay, well, I think we can just start, and I think we are recording this session, so if anyone misses anything, we'll send out the recording afterwards as well. So yeah, as we said, welcome to the demo of our inFlyte solution. So that's our Oracle native tax solution for indirect taxes and calculating taxes around the globe. So just to cover what we're going to see today, on this during this webinar, we're going to talk a little bit about how our solution works, how we use Oracle and the native Oracle tax engine to drive taxes, calculate taxes around the globe. We're going to focus on three countries that we're going to show you in the demo today. So we're going to look at France, Canada, and the US, and we've chosen those because France is a good example of a kind of a standard European country with a kind of a VAT system. Canada, we've chosen Canada because of its multiple provinces within a single country. It's slightly different to a European type setup, and then also the US as well. And obviously, if you know much about indirect tax, US is a bit of a different beast to the rest of the world, just because of the sheer volume of sales and use tax rates. And the jurisdictions involved across the country. And then there'll be some time for questions and answers as well. But I do encourage people to put questions in the chat throughout the session. If it makes sense for us to kind of tackle them during as we go, we will do. Otherwise, we'll save them to the end and try and cover them off at the end. But I do encourage people to ask questions if you have any. So first of all, do some introductions. My name is Sam Thomas. I am the practice lead here from our commercial team for our Oracle practice. I've been at Innovate for, I think, about 8, coming up 9 years now, and I help our clients that use an Oracle ERP find the right tax technology solutions for them. Generally, taking a kind of Oracle first approach, looking at what you can do with the Oracle ERP, but also with other tax technology solutions as well. I'm based in the US. I've been here a few months now. So my main role is working with businesses that are kind of US headquartered, but I've been working with clients that are situated all over the world. I apologize for my slightly raspy voice. I was at Oracle AI World last week, and I think I might have picked something up coming back, shaking too many hands. But yeah, and I also have broader shoulders than you can see in this picture as well. But I'm going to hand you over to Marcus. Do you want to introduce yourself? Marcus will be taking you through the demo today.
Hi, sure, yeah. So I'm Marcus. I've been with Innovate now for just over 2 years, and I'm one of our functional consultants who is tasked with gathering requirements from clients and then implementing our solutions, again, primarily Oracle, where we can do that first with our inFlyte solution, which we'll see, but also I do work on other third-party engines such as Vertex and Avalara.
Great, thank you, Marcus. So a little bit of an introduction, just in case if you don't know who we are, we're a tax technology company. focusing on indirect taxes. So transactional taxes, sales and use tax, VAT, GST, etc., and helping businesses automate indirect tax determination across the globe, and using tax technology, whether that be using the kind of inherent functionality of their ERP system. Typically Oracle, we're best known for Oracle solutions, but also working with other solution providers such as Avalara, Vertex, OneSource, Sovos, etc., to deliver tax technology solutions, essentially to help global enterprises manage indirect tax compliance across the countries that they operate in. We're based in the UK, out of the south coast of England, in a lovely little town called Bognor Regis, sunniest town in the UK. But we do work globally. We've implemented solutions in around about 165 countries now. As I said, I'm based out in the US as well. And we also build our own products as well. So we're not just a professional services business. We also build our own tax technology and compliance tools. And we try to offer the businesses that we work with as many different options as possible from a tax technology standpoint to help them navigate the kind of the complexities of the global legislation. So what we're going to talk to you about today. So this session is pretty much purely going to be focused on our Oracle native solutions. And when I say Oracle native, it's a terminology that I use all the time, but it might not resonate with everyone. But Oracle has a tax engine. So whether you're talking about Oracle R12, which is the older sort of on-premise version, or Oracle Cloud Fusion, it comes with a tax engine as part of the financials modules. And not everybody knows this, actually. A lot of the people we speak to aren't fully aware of the functionality available. But one of the things that you don't get when you purchase the Oracle ERP is any content for that tax engine. So it's a really powerful piece of kit, but generally you either have to configure it yourselves and build out that content. And when you're a global business with lots of complexity, operating in multiple countries, that can become quite burdensome, especially from a maintenance point of view. Post go live, because as we know, tax is a shifting landscape. It doesn't necessarily sit still. So what we've done, because of this lack of content, is essentially built out these solutions which we call inFlyte, but it's essentially pre-built Oracle configuration, country specific, based off of the tax legislation of that particular jurisdiction, to automate and calculate indirect taxes across, as you can see, 165 countries. It's all using standard Oracle functionality. It's not customized. It's not a separate piece of software that integrates with Oracle. It doesn't call out of the system. Everything we do with inFlyte happens within the ERP system. And it allows businesses to leverage the native functionality that they already own as part of the financial suite, to automate taxes around the world. We have inFlyte, which we're gonna demo, and also inFlyte US. It's part of the same solution, really, but we separate them because US is a slightly different approach because of the amount of the content that is required for the US because of the constant changes there. So we provide in the US a rates file, which we update every single month, and is uploaded into the ERP system to stay on top of compliance. But again, you can. There are some limitations in the US around Oracle, which we might be able to cover today. But for the majority of businesses, or a lot of businesses, you can actually use the native functionality of Oracle once you have the content to calculate sales and use tax across all 50 states. So just to give you an idea of how we implement and deliver this solution. So as I said, we have inFlyte, which is pre-packaged Oracle content. So that's all of the regime to rate. That's all of the tax codes, the tax rules, the tax conditions, all country specific, built off of the country's legislation. but all part of this wider piece. So it has consistent naming convention, consistent approach from a user perspective, and it looks and feels the same across all 165 countries. And we have a repository of this content, which we then, if let's say if we're implementing for a client who operate in 20 countries around the globe, we can take that content from our repository, and we use a tool and methodology that we call rapid install, where we can essentially take all of that pre-packaged Oracle configuration and directly install it and upload it into the ERP system within the space of half a day, in some cases. So that doesn't mean to say that a project with us will take half a day, but we can go from having absolutely zero content, which generally is built from scratch. That's kind of the traditional approach, which can take a lot of time and effort and puts a lot of burden on the kind of tax department. But we take a different approach where we have our content, install it into the ERP system, and then from there, once it's in place and you have the core foundations of the solution, Marcus and his team will work with our clients, understand the more complex areas of the business. Do you interface data? Do you use different source systems? What are your business processes? What are your modules, etc., etc., to build in additional functionality and layer that up on top of the core solution to give you ultimately as close to 100% automation from a tax determination standpoint using standard native Oracle functionality. And we also fully maintain it as well. So post go live, when legislation changes, we make those changes in the system for our clients so they don't have to stay on top and manage that internally, because that can become quite burdensome. So that's just a really high level overview of what we're going to show you and how we approach it. Just before we jump into the demo, I wanted to just cover this point off, and we've got a couple of slides here because we do these demos, and oftentimes because it looks like we're manually typing information into the system because we are. It never looks that automated in my opinion. But the reality is, our clients aren't generally processing manual invoices, as in someone in AP will come in and physically type in the information into the invoice details in the AP module, for example. So there's multiple different ways that information can get into Oracle. So whether that be through scanning tools, a lot of businesses use the IDR product that Oracle supply as part of the financials suite. Or it could be coming from purchase orders or interfaces from outside of Oracle, bringing in data. And imports as well from CSV files, for example. But there's lots of different ways that invoice transactional information can come into the system. And once it's into the modules in Oracle, that's where our kind of automation happens behind the scenes. It's a rules-driven system that's using determining factors, which we're going to talk to you a little bit about. Taking certain information that's come from the invoice, whether it be supplier, customer, there's lots of different factors you can use to drive that calculation. So I just wanted to point out that there's different ways that information comes into Oracle. And what you're going to see is today is going to look fairly manual, but the actual tax calculation is all being driven by rules in the background. So here's an example of an invoice. You can see the different information that in this is a very standard invoice here. This is GB VAT, 20% standard purchase of some laptops, but you can see the customer and supplier information and the totals. And this will get into Oracle through, one of those ways that I've just mentioned. And this and Oracle, that information will get passed into the relevant places within the Fusion screens. And this is a screenshot of Oracle Fusion. And we're gonna jump into that in a second. But I just wanted to show you how this information gets pulled across, and then from there, once you and Marcus will do this, you press the taxes button, and the tax will automatically calculate. And you can see here that the system has generated the GB VAT standard 20% VAT. Very basic, very straightforward. But we're going to show you some more complex invoices now. So just before I hand over to Marcus, as I said, we're going to look at France first because it's a good example of a European VAT regime. I think we're going to show you some kind of reverse charge transactions and potentially some triangulation taxes, I think. Before we move to Canada, which is a little bit more complex, some businesses we've seen struggle implementing Canada because of the it has multiple provinces within the same system. So we're going to show you how we can calculate the different GST, HST, and PST calculations on a line by line level. And then we're going to move into the US as the final part of the demo, and we're going to show you how you can calculate state, county, city level taxes within an invoice, showing the line by line level determination, and you can do that across all 50 states. And I think we're going to show you some how you can drive taxes by exemptions, which is quite common in the US, as well as use taxes as well. So without further ado, I'm going to hand over to Marcus now, if that's okay. And Marcus is going to jump into the Oracle Fusion screens to show you some transactions going through France to start.
Sam, let me just bring up my screen. There we go. Yeah, so like Sam said, I'm going to start with France and go through some scenarios. Most of these scenarios will be covering all the basic fields we use, how we can automate tax, and then as I go on, I'll kind of show the more specific scenarios to the countries that we're going to demo. But all of the kind of basic fields that I show initially apply to pretty much every country that we can implement using our inFlyte solution. So I'm just going to start off with a basic domestic France invoice. So these invoices have been pre-populated with the information, but the tax hasn't been calculated yet. So all the line information's here. So we can see here on this invoice, we're getting an invoice from a French supplier. We've got a few different lines here which have different, let me just unhide this, which have different tax calculation on. We've got a product and a goods and the services line at the top, and then we've got a few other ones here which we've got some overrides being used here, but again, we can automate this using some other setups, which I'll show in the next invoice. So tax hasn't been calculated yet on this invoice. So this is kind of how you would receive an invoice from a domestic supplier. If I open up the taxes panel, when that loads and taxes calculate, you'll see here the different tax lines that calculate for each of the invoice lines. So we've got the top two lines are calculating standard VAT, which is this 20% and a total of 40, so that's 20 on each of these lines. We've got this middle line here where we've got a reduced rate being calculated. Again, that's pulling from the override, so you can get any reduced rates any countries have. They're part of our core solution, and we can calculate those quite easily. We've got an exempt line. Again, that's calculating this exempt tax line here. And then we've also got an inclusive tax line. So this is where the tax has already been added to this total of the invoice line, which is this 100. And you can see here, it's a 16.67 total tax amount, and it's got this inclusive tax flag showing already here as well. So this just shows a few different kind of domestic tax results, which are quite common scenarios, and all of them are included in our core solution. If I open up the second invoice, we have this one is another domestic invoice. However, in this case, the supplier is an exempt supplier. So what we've done here is, rather than using any overrides, this supplier here, Christophe Picard, is exempt from issuing sales tax, issuing VAT. So, for example, if a supplier in a country doesn't reach the minimum threshold to be able to register for VAT in a country, we can set things up so that they don't actually issue tax when that supplier is used, or if they're exempt from tax, like in this case, again, we can add a code to the supplier record, and then when that supplier is used, then the tax is automated using the information on the supplier record itself. So here we've got one line which doesn't have any additional information on, so that will follow the exemption. There's also another one which has an override. So this is just going to show that even if a party code exists, if there's an ad hoc scenario where tax is being applied for some reason, that can still be applied even when the supplier is normally exempt. So again, we can see here tax is calculated. The first invoice line has the exemption, which is again just pulling from the supplier record itself. However, there's also this second line where it's an ad hoc scenario. So in this case, the supplier has actually issued an invoice with VAT. We've been able to use an override here to then, instead of calculating exempt, we can calculate this 2.1% reduced rate instead. So that kind of covers the basics of all of our kind of domestic scenarios. I'm then going to just quickly show a couple of EU scenarios. So in this case, we've got a supplier. So we're getting a supplier from Italy and it's billing France. In this case, again, we've got a goods and a services line, and again, a couple of overrides here. These, again, can be issued using, can be added using party codes and what have you, but in this case, just so we can show all the lines on the one invoice, I've added them as overrides. So here we can see the setups we have for EU transactions. So the first line is a goods line. We can see here that there is an EU AP goods positive line and also an EU AP goods reverse charge line. So that's showing the EU reverse charge mechanism that all EU countries have. So all of our inFlyte configuration has this as standard. So any time one EU country transacts with another, or one EU party transacts with another EU party, you'll see this reverse charge happening. The same thing occurs for services, but instead of it being lumped together into the same tax code, we have a differentiation. So you can see here there's the services 20%, and then also the services minus 20%. So again, the reverse charge is being indicated there. Then we've again got two overrides here. The one is the exempt from VAT. Now, that only applies in our configuration to domestic transactions and invoices. So you can see here where the exempt code has been added, it actually isn't affecting the tax calculation. And what's happening is the tax is actually being calculated as the goods, EU AP goods reverse charge, which is why there's an amount of 40 here for both the line 1 and line 3. So it just shows that overrides are also specific to the scenarios. They don't blanketly apply in payables to override a tax in every scenario. However, we do have also a 2.1% override, and that here has calculated the tax as another EU reverse charge, but it's an EU reverse charge at a reduced rate. So there's a lot of flexibility in how overrides work, or even automation to calculate these additional tax rates. And we can show all the different reverse charge scenarios, all the exemption scenarios as we need to. The final, sorry, not the final one, the next EU scenario is a triangulation, which Sam mentioned briefly before handing over to me. So in this case, we have the same Italy supplier. However, this time we're shipping to a location in Denmark. So there's this field in payables, which is ship to location. This means if you have a warehouse or multiple locations under the same legal entity or business unit, you can pick a location to affect the tax calculation. We'll see this when we look at the US and Canada as well. But if I calculate tax for this invoice, you can see here, rather than having an EU AP goods reverse charge, we've got this triangulation reverse charge. So because we've got the 3 locations, we've got Italy as a supplier, we've got France with their business unit and legal entity, but we've also got the ship to location of Denmark. There's now a triangulation occurring in the EU. So we have specific setups again, out of the box as part of our core solution and part of our inFlyte solution that automatically calculates these triangulation scenarios. And we also have the same thing on the AR side as well for this. And then finally, on the AP side, we've just got a foreign supplier. So in this case, we have a supplier which is based in China. So we have this Chinese address here on the supplier. Again, still billing France. And kind of similar to the EU one, we've got a goods and the services line, and we've also got an exemption override and a reduced VAT override. However, in this case, you'll see that we have, so France actually is a bit unique. So this is kind of one of the requirements we can tailor for some countries is France has a reverse charge requirement on importation of goods. That's been in place since about 2022. Most countries will just have a 0% rate here rather than a reverse charge for import goods. But you can see here France has this reverse charge instead. But again, we have that from the goods line, and we also have a reverse charge for the services. But again, it's an import goods reverse charge, import services reverse charge rather than the EU reverse charge. So there's that differentiation between an EU transaction invoice and a foreign invoice. But in this case, you can see again, these two overrides we were previously using now have no effect on the tax calculation. So because it sees a supplier as a foreign supplier, even with an override, we have the setups in place to say that, okay, it's a foreign supplier, these overrides actually shouldn't apply. So you're always going to get the import result instead of, say, an exemption or a reduced rate, which wouldn't actually be the correct result for this scenario. So that kind of covers the AP side, the automation using party codes and using the product type, using other fields. Ship to location is all present in AP and AR. So AR you can use a ship from, you can still use the party codes on the customer records to automate the tax solution. I'm not going to cover all those scenarios in the AR side as well because we've only got so much time, but I'll quickly just show this is in AR, and this time we've got an invoice to from the French business unit to a Polish customer. So it's an EU customer in this case. We've got a goods and a services line again, and we've got two overrides in this. So it's a different field in AR, but we've got two overrides again where it would normally be the EU sales rate, but instead we have an exemption and a standard override. If I look at the tax here in AR, we can see that the goods and services lines calculate this EU sales goods rate and EU sales services rates here. However, we also then have the overrides. We're saying, okay, this customer is actually exempt, so there's an exempt tax line, or we actually want to issue sales tax, issue VAT, even though the customer is based in a different country, based in Poland. We can still force the system to do that if it's needed to. So that kind of covers all the basic France scenarios that I've prepared for this. If we have any questions about those, please let me know. We can cover some more scenarios if we've got time at the end. I'm now going to flick over to Canada. So I'm just gonna toggle my screen off for a sec whilst I prepare these. So in Canada is kind of that extra complexity comes from having multiple provinces and provincial tax. Again, we have a solution which caters for this. So let me bring this back up on here. So I've just got the kind of one invoice from a Canada site to show. So what we have here is we have, this time we're using the Canadian business unit and legal entity, and we've got a supplier which is based in British Columbia, or the supplier site is based in British Columbia. Now, how we drive Canadian tax and GST and provincial sales tax is all using the ship to location primarily. So if a ship to location is not populated, we would use the address of the legal entity. But in this case, where I've said, okay, the supplier is shipping to Ontario on line 1 and Quebec on line 2, when I calculate sales tax, we'll also see a harmonized sales tax line calculating for tax for the line 1. So this 13% is coming from line 1 with the Ottawa location, and the other 2 lines are the split of the GST and the Quebec sales tax as well. So we have a 5% GST and a 9.975% Quebec sales tax, which applies to line 2. And we post those tax lines separately or in when a tax is calculated, so that they can be reported appropriately to the relevant tax authorities separately, because you'll have to report the Quebec sales tax separately to the normal GST line. We do also have part of our standard setups. Provincial sales tax, apart from Quebec tax, is generally not recoverable, and that is also the case as part of our standard solution. All the other sales taxes, so British Columbia, Manitoba, and so on, are not recoverable as part of our core solution. And then just for the AR side for Canada, I just need to bring up the transaction, which is this one. So on this side, what I'm just going to demonstrate here is we've got the Canadian business unit again. Then we have a Canada, well, it's American Heart Association customer, but the actual customer sites are in Canada. This site is in British Columbia this time. In Vancouver. And what I've done for this customer is I've added an exemption code again, but in this case, the exemption code only applies to the provincial sales tax. So sometimes you might have a customer which is registered for GST, but not registered for provincial sales tax. Also, quite oftentimes, certain services like freight and other transportation services in Canada are applicable for GST, but they're not applicable for provincial sales tax. So in those cases, you'll want to calculate the GST tax line, but not the PST tax line. So we've got 2 lines here again. One line is just a standard tax line, and the second line has an override here. So what we'll see is the first tax line will calculate the GST here, which is the 5%, but because the customer has had the exemption for the provincial sales tax added, we then get this exempt tax line for the provincial sales tax. However, on line 2, where we've said, okay, actually we want to charge provincial sales tax to this customer, we've again got the GST tax line, but we've then also got the British Columbia overridden tax line here. So where it would normally be exempt, we're actually now charging the 7% provincial sales tax as well. So there's flexibility in the solution there. So even if you did have, say, like I said, a supplier that's always exempt from something, we can then still cover these ad hoc scenarios where tax is calculated or needed to be calculated. That kind of covers most of the France and Canada scenarios. I'm just going to again quickly turn my screen off whilst I bring up the US. So as Sam mentioned earlier, the US is a bit of a different beast to most of the other countries across the globe. You obviously have usually 3 main levels you're reporting sales tax at, so state level, county level, and city level. And there's obviously thousands or tens of thousands of rates across the entirety of the US as well. So we have a solution for that. We have our Innovate Tax inFlyte US solution, which contains as part of it a US content file, which includes all the rates and jurisdictions needed to accurately calculate sales tax at the state, county, and city level. So I'm just going to, again, toggle my screen back on. So I've got 3 invoices here to just cover the AP side of the US. So this first one is a billing from the US. Billing from the US in Georgia here to our US business unit, and in this case we've got a ship to location of Albany in New York State. So as I mentioned earlier, this ship to location is quite important across different countries, including the US. In the US, this is used again as the primary kind of tax location for payables, and if this isn't populated, then the location of the business unit will be used instead. But if I again calculate tax on this invoice, we can see here how our sales tax breaks down for the US. So it's using this Albany, New York location, and what we have here is the state, county, and city tax broken down into separate tax lines. So we have a 4% at the state, 4% at the county, and a 0% at the city level. So this occurs for pretty much any location you would want to ship to, or if it's a customer's location, again, we'll see that on the other side in a minute in AR. But this level breaks down all those taxes, so you can report accurately to the correct tax authorities in the US at these different levels. I will just quickly update this location here just to show you how this does determine the tax. If I now change this to Fairfax in Virginia instead, and if I just recalculate tax, I'm just going to reopen this panel. So now you can see how the tax has changed. So now we're using this Fairfax location. Here we now have the corresponding jurisdictions for Fairfax in Virginia instead. So we've got Virginia state tax, Fairfax county, and Fairfax city state tax level taxes as well, and the corresponding percentages. So that's all just being using the location that we've added to the invoice. My second invoice is just to quickly show, kind of similar to how we saw for France, a foreign supplier. It's mostly similar for the US. So here we have a Chinese supplier again shipping to Albany in New York. And this time, rather than calculating any state, county, city level taxes, we have an exempt tax populating, which is showing as this import rate. Now, the reason we populate a tax line rather than just not calculating any tax at all and no tax line is just purely for audit purposes. If you came back to this invoice, you can see that it's not an error with the system. You don't have to look at it and go, okay, why is there no tax calculating? Is that actually what we want? When there's always a tax calculating, and the tax line tells you what it's doing. So here you can see again, it says import in the rate itself. You can look at this and you know what the system's done and why it's done it. And if there are any issues, then it's easier to identify where that's gone wrong as well, if that was the case. And my final one on the AP side is a use tax invoice. So one of the more common things we see in terms of the US is questions surrounding use tax. So if a supplier doesn't have nexus in the location you're getting it shipped to, if you are consuming the goods or what have you that you're being provided and you need to remit use tax for that, we do have a solution for that as well. So In this case, again, we've got the same supplier actually as the first time. We've got the same ship to location. However, one of the ways we can automate use tax is using the GL combination on an item line. So in this case, we have this, if it's going to open for me, we have this product here. Now I've made this product automate the use tax. Whenever this product is selected, use tax will calculate rather than sales tax on the tax line. So what we can do then is if I calculate tax here, you'll see that we still have the same breakdown as state, county, city, except here we have a slightly different rate name. So before, when it was sales tax, it was showing US SGen for sales tax. Here we now have US UGen for use tax. And this self-assessed flag here is checked. So this indicates that use tax is being calculated. You'll see the tax is actually totaling 0, so you're not actually issuing any tax to the supplier itself. However, you will still have to remit this to the local authorities, the tax authorities, as needed with this self-assessed flag checked. And we can also automate use tax if a supplier, like I said, if a supplier is always is exempt, doesn't have an access in the ship to location or with your company, then we can always we can add the party code at the supplier, so it always issues sales tax. There are other ways we can automate sales tax, and we also have the manual override as well if you did have an ad hoc scenario for where use tax would apply when a supplier would normally issue an invoice with sales tax. And then just going over to the AR side again. I'm just going to bring up this invoice. So this is again kind of just a standard AR invoice for sales tax, just kind of showing the other side of it. So in AR, you've got the customer with the build to and the ship to information. Again, as kind of the default, we'll look at the ship to first. If the ship to is not populated, we'll look at the build to location. We've just got a single item here where the tax is going to calculate based on this ship to location of the customer. So again, the sales tax gets broken down USS Gen as the rate name for sales tax, and we'll see over here that it breaks down again into state, county, city with the relevant tax rates for each. Now, another thing we see in the US quite a lot is the requirement for origin-based sales tax. So that is when there are 10 or so states in the US where sales tax is based on the origin location of the invoice rather than destination. So both the seller and the customer has to be located in the sales tax for that to take effect. So in this case, we've got a slightly different customer, which has a Texas location. We've got the same item as before. However, we're shipping it from the Dallas warehouse, which is also in Texas. So in this case, what's going to happen is rather than the tax being calculated on the customer location, because both the ship from and the ship to locations are in the same state, and Texas is an origin-based sales tax state, they all use the address on the warehouse, which is this Dallas location, rather than this Houston location on the customer. So what you'll see here is the tax changes the places applied to the ship from, because it's an origin location, and the tax is now looking at the Dallas location of the warehouse rather than the Houston location of the customer. So origin and state stuff, again, this is all part of our core inFlyte solution. It's covered using just purely the locations on the invoices. And then I've just got a couple of exemption scenarios just to cover towards the end of this demo. So Oracle has native functionality for customer exemptions on the customer records. So in this case, this customer, I have added an exemption record to. And what that does is it looks at this to then adjust the sales tax, basically. So it's a very similar invoice. We just got a normal kind of invoice line with just a standard quantity. However, what you'll see is because of the exemption record on the customer, the state, county, city still generates, but rather than being the percentages, these are changed to zeros. Now we can, if a customer has a partial exemption or they have a specific rate they're actually charged rather than the normal rate, you can also set that up within Oracle on the customer record to adjust these rates as needed. The only kind of restriction with the Oracle native exemption functionality is you can't store certificates, images. So you can store all the information when it's effective from effective to, but the actual image of the certificate, Oracle doesn't have that functionality, which is kind of one of the reasons people tend to go to third-party engines at that point. The other way to drive other way to drive exemptions is using a party code similar to how we saw for France and Canada. So this is just another kind of standard US invoice, but this time the customer has a party code on it. As part of our core solution, we have exemption rates which are set up using party codes, and we have specific rates set up for different reasons. So here we've got a manufacturing one. However, you can also see there's always other reasons which, if the party had the relevant the customer had a relevant party code on, all these different exemption rates would calculate instead. So there's a couple of ways to go around exemptions in the US. I believe that pretty much covers all of my demos. I will stop sharing my screen.
Great.
Yeah.
Thank you, Marcus. That was good, and no technical glitches.
No.
Excellent. We have had a few questions in the chat. So there's a couple that I want to take on, but there's one here around intercompany transactions and how that's handled in Oracle. Are you able to give us a little overview of how Oracle handles those types of scenarios?
Yeah. So Oracle has a core intercompany module. I think it's called Aegis in R12, but we've got intercompany in Fusion. And what that does is it calculates tax using the normal tax rules, but then once something's passed to the other, so once the invoice is generated in AR, the AP invoice is automatically then generated using the information from the AR invoice. There can be some limitations of that, because what it will do, it will copy the tax rate that was generated in AR to AP, and there are some workarounds to make sure that if it's, for example, if it's in a different country, the tax line for the AR side will still be on the AP side, even though it's a different tax regime potentially. But there are fields and workarounds for that. Otherwise, we do have kind of our own intercompany setup. We can use party codes to drive intercompany transactions. So if something was part of a VAT group, we can set up that group configuration so that tax isn't charged between parties.
We've had a follow-up there. Can you see that in the chat?
Yeah, I can. I think it's quite a lot to go over kind of on this meeting, or maybe we can come back to it. I've actually discussed having kind of an intercompany meeting demo separately with a couple of people, because it's quite a unique module. But if they are made using different interfaces and things, there is functionality for it within Oracle to cover basically any intercompany scenario. It's something we encounter a lot, and lots of different companies use different interfaces to generate those invoices. But it is something we can cover in most scenarios.
Yeah, actually, to that point, a lot of the questions you've raised, Arthur, actually might require a separate session actually, because we could spend a lot of time discussing them. But just you've asked a few there that I'll just cover off. So yes, we do have experience with replacing Vertex. We've had clients in the past that have wanted to move away from third-party tools to using the native functionality Oracle. We've done that previously. We also implement Vertex O series, so we have a pretty good understanding of both sides. From a reporting perspective, so you mentioned it's around R12. Yes, for R12, we do provide additional reports to the kind of standard seeded functionality. In Oracle Cloud, it's a little bit different. We only use the seeded reporting in Cloud, but for R12, we've developed what we call a TMR report, which has a lot more fields of information than the kind of standard financial tax register. It's still a preparatory report. It's designed to provide all of the information you'd possibly need to be able to prepare a VAT return or a tax return in any country. So there's a lot more detail for reporting from an R12 perspective. So happy to set up another call and go through that with you if you like. And then troubleshooting tax calculation. So yes, we do have a product called Limelight Visualization, which is a kind of a dashboard tool that connects to the ERP. And that's exactly what it's for. It's for troubleshooting transactions. It's going to highlight where perhaps users may be overriding the rules or manually inputting invoices where they shouldn't be, and give you a bit more visibility on issues, as well as showing you different tax holds and things like that. So there's quite a lot of functionality there. Again, that's probably a separate session. Currently, that's only available for R12, but we are working on the Oracle Cloud version as well. And then the last question around the API. So this is potentially an interesting one. So as I understand it, there's no public API to be able to use the Oracle EB tax engine, as a kind of standalone tax engine, in a way, which is what I think you're suggesting. But we have actually built an API for EB tax. So actually, depending on your scenario, again, probably makes sense to have a specific conversation with you. We may actually have an API that can do that. So if it's a conversation you want to have separately, let us know and we can go through the scenarios in a bit more detail with you. But in theory, it's possible, but there isn't a kind of public API that Oracle provides. But yeah. Hopefully that kind of covers it off. And Damon, just to reiterate, we will be sending the recording of this session to everyone afterwards as well. But if anyone has any specific questions, because a lot of the questions we get around this topic generally can be quite business specific. So these demos that we do quite wide and quite varied, and we try to show lots of different areas. But actually, if you've got any specific transaction scenarios that you're struggling with, or you're trying to tackle within Oracle, or using a different system and considering different options, just let us know and we can spend a bit of time chatting to you about how we would handle it in Oracle.
I guess just to kind of follow on to your response to Ed's question as well about the rates file. That's something that I'm quite involved with. I'm kind of one that does it every month from our side. So yeah, it is a monthly file. We provide it at roughly the middle of the month, and we used to provide it towards the end of the month for the upcoming month, but then that ended up usually cutting off a lot of the rates that were provided by some states. So we now provide that at the middle of the month. And yeah, it does contain basically all the rate changes, and it's a very simple process to basically download one file from our portal and upload it into Oracle, and it's pretty much about two-step process. That the whole thing takes about 5-10 minutes usually.
And it's all standard Oracle functionality, right?
Yeah, it's all standard Oracle functionality. It's not using any customization. The file gets generated in a format which is part of Oracle's standard rapid upload template for Fusion. For R12, it's a similar process. We have our own custom process in R12, which would be added as part of our report suite. Which you just pick the file and upload it basically in both. But yeah, it's all using standard functionality otherwise.
Yeah, brilliant. Okay, I don't know if anyone's got any other questions. We've got about 5 minutes left. We probably if there are no other questions, we probably can wrap it up a little bit early. Um, but yeah, I would want to say thank you for joining. As I said before, it's the first time we've done one of these, so hopefully it was worthwhile. We'll send out the recording after the session, and then yeah, if anyone did want to have a kind of just a follow up for any specific questions relevant to them, just get in touch and we can set that call up. But yeah, again, thanks for joining, and thanks Marcus for taking us through. Appreciate it.
No worries. Thank you, everyone.
Thanks everyone. Have a good day.
Thanks.